Jenny Harrington, I posed a question to you that we posed at the very top here as we intro the show. It's hard not to be bullish given the run we're on, but does it also make you a little bit nervous that we're pulling too much ahead?
It definitely makes me a little bit nervous. I was thinking about this and thinking about that I need to be taken with a grain of salt because I am a dividend investor. So I look at the world through a cautious lens. And I was thinking about the last time that I was actually enthusiastic and what the backdrop to that was. And the last time I was actually excited and enthusiastic and feeling great about the market was coming out of 2018. And I wrote in my quarterly letter to clients, we are extremely enthusiastic about the prospects for next year. That was going into 2019. It turned out to be right. But that's when I get enthusiastic. I'm excited when things have been terrible. When things have been wonderful, that always makes me a little bit nervous. And I think it's okay. I just want to make a point, too, which is just because I'm a little bit nervous, just because I'm a little bit cautious, doesn't mean I think the bottom falls out. And it doesn't mean that I think that you shouldn't stay invested and probably fully invested. I think any educated investor knows that market timing can bite you pretty badly. If you're a trader, right, you can probably get it right. If you're a long-term investor, you stay invested. So please don't mistake my caution and my apprehension for being invested, being positive over the long term. I also think that there's a lot of headwinds that are going to come our way. As we think about the last couple years, you know, we've had the Fed as the tailwind, just pushing us ahead. That's going to be a headwind. If you want to say don't fight the Fed, you need to remember that that cuts both ways. So we've got tightening ahead, we've got higher valuations ahead, we've got tougher comps ahead. I'm not so sure it's going to be a great year next year, but that doesn't mean I think it'll be terrible.
And yet, Weiss, we hopefully have the end of the pandemic ahead. And the degree to which that trumps all of the perceived headwinds that we have of higher interest rates and the Fed and who knows what else, midterm elections, geopolitical risk that certainly is still out there. As I said, you know, we're making quite a burst here to the end of the year. Does it make you more positive on that, you know, that we can carry this for a while? Or do you just feel like we've pulled an awful lot forward?
Well, first of all, sympathies to Jenny for having such a bad or dull 3 years. I've been pretty excited about what's happened. Look, this seasonal period really doesn't give me any thought process going to next year. If the market were up 5% a day or up 10% from you know, just a couple of weeks ago before we had the seasonal push, then maybe. But we're hitting new highs, but they're minor new highs. We're not leaps and bounds. So I don't think we're stealing anything from next year. I do expect maybe a slight lull at the beginning of January that we typically see, and then the market's going to do what it's going to do. And I think Jenny's right to be somewhat cautious, it sounds like, or be guarded, because there are some headwinds coming from us. Before we get to those headwinds, though, what we're going to get is momentum in the economy and companies that seem to be navigating the inflation issues pretty well, very adeptly. So the first quarter is going to be somewhat of a tell, as it always is in terms of guidance, but particularly with the inflation scenario. So look, so I'm longer than I've been in quite some time. I'm actually fully invested at this point. I will start taking exposure off in January. I had been at about 30% cash. Now we got that massive sell-off, and I say massive because while the indexes didn't show that, stocks underneath did show. When you have names like Target trading down 20% in just a couple of months, or Dick's Sporting Goods trading down from 140 to breaking 100, and some of the others that I'm sure we'll talk about, that's what I was looking for. So I put cash to work.
But let's do that now. Let's do that now. Let's talk about Target, which you say that you've added to meaningfully on the pullback.
Yep, I did. So I sold some of my position up higher, and since in taxable accounts rather than tax accounts, I was able to do that. The part that was in accounts where you pay taxes, I didn't do that. But retail overall was declining, and some got hit more than others. So I want to sell, take some of those profits again that I didn't have to pay taxes on, and re-enter when it stopped going down. It stopped going down, so I actually have a larger position now than I had when I started.